Hi, my name is KJ Pruitt, and my partner's name is Peyton. And this is our part two for our Under Armour investment analysis for Professor Berlin's class, Business Finance. So, with our first page, we'll start with our Under Armour's capital structure. And it's just really like an overview of leverage ratios and market value ratios. It emphasizes on debt financing versus equity, role of debt and supporting growth and operational strategy. So basically, this is just like a overview of our presentation and what it will all be over. So this is our bond issuance details, and our issuance date and purpose is issued in June 2017. Funds for capital expenditures, retail expansions, and refinancing older debt. Total amount raised was approximately 500 million. For our bond characteristics, we had coupon rate was 7.75%. Maturity was 10 years. Our par value was 1,000 per bond. Our call provision was callable after 5 years. Sinking fund provision required periodic repayments. Non-convertible. And our current ratings, originally rated B2, later downgraded to B3. Implications for risk and yield for investors. So our Under Armour IPO overview. Our IPO date was July 2005. Stock issued details: common stocks issued, priced at approximately $20 per share. Issued 5 million shares, raised 100 million. Our market reception, strong investor confidence, set the stage for future expansion. So basically, it was set in the future for like how big the expansion could be. So this page is our time series stock price analysis. We got our data from Yahoo Finance. Our overview of stock price fluctuations and volatility. Our key factors impacting major ups and downs, earnings announcements, economic conditions, and our strategic company actions. So as you can see, this is our collected adjusted close prices for Under Armour. Day of the IPO, July 18, 2005, was $20. For 3 years ago, April 5th, 2022, was $8.50. For 2 years ago, April 5th, 2023, was $7.80. For 1 year ago, April 5th, 2024, was $9.20. So you can see how obviously everything changed and how the prices adjusted quite a bit. 1 month ago, March 5th, 2025, was at $10. 1 week ago, March 29th, 2025, was $10.50. And today's price, April 5th, 2025, is at $11 right now. So on this page, you can see like our ROI calculations. You can see like where our initial price, today's price, and times 100% gives you like your IPO to today. This is basically a broad overcast of the last couple years. For 3 years ago today, for 2 years ago today, you can see the difference between 3 years ago today versus 2 years ago today, where when you do all the calculations, it equals, for 3 years ago, it equals to 29.4%. And when you go to 2 years ago today, you see it at equaling at 41%. So just right there, you can see just like the big jump from 3 to 2. And then with today's ROI, it declined to negative 45%. So this long-term return indicates a significant decline from the IPO price. So basically, you can see that the IPO it declined quite a bit.
ROI calculations. 1 year ago today, this shows our ROI calculations. 1 month ago today, it will show at the first bullet point. The second bullet point shows our 1 week ago from today. And then over the past year, the investment increased from $9.20 to $11, resulting in a return on investment of approximately 19.6%. Over the past month, it went up from $10 to $11, giving a 10% ROI. Over the past week, the value rose from $10.50 to $11, which is a ROI of about 4.7%. In short, the investment has consistently grown with stronger returns over longer time periods. Investment evaluation. Some of the strengths: strong brand recognition and market presence, successful IPO and strategic growth initiatives. Risk: stock price volatility, speculative bond ratings and debt financing implications. Investor considerations: suitable for risk tolerant investors. Importance of diversification. Overall assessment: balancing growth potential with inherent market risk. The company has a strong brand and solid market presence, supported by its successful IPO and smart growth strategies. However, its stock can be volatile, and there are concerns about debt and speculative bond ratings. It is best suited for investors who can handle risk, and diversification is key. Overall, the investment offers good growth potential but comes with notable market risk. Our presentation recap: reintroduction of Under Armour's capital structure and leverage ratios, detailed analysis of the bonds, insurance, and characteristics, summary of the IPO details and initial market reaction, time series analysis of stock price trends and ROI calculations, and investment evaluation risk, rewards, and strategic considerations. Future outlook and conclusion. Future directions for Under Armour's financial strategy emphasizes on interrogating digital transformation and performance management, potential for long-term growth and aimed market volatility. Final recommendation: investment potential for risk-tolerant portfolios, innovation for questions and discussion. Under Armour plans to focus on digital transformation and performance management as part of its financial strategy. Despite market volatility, there's potential for long-term growth. The stock may be a good fit for investors comfortable with some risk. Our investment: Under Armour appears to be a good potential investment for those willing to accept short and medium-term volatility in pursuit of significant returns, provided that they conduct through due diligence and remain mindful of the risk associated with its capital structure and market performance. Under Armour appears to be a good potential investment for those willing to accept short to medium-term volatility in pursuit of significant returns, provided that they conduct through their due diligence, as said before, and remain mindful of the risk associated with its capital structure and market performance. Investors should also consider the company's ongoing efforts in digital transformation and strategic performance management, which could position it for sustainable growth in competitive and rapidly evolving industries. Diversifying within a broader portfolio can help mitigate risk while capitalizing on Under Armour's long-term potential. These are our 3 references we use for our PowerPoint, our presentation. Thank you.